If you missed the first video in this series on how to start the home buying process, you can find it here. If you've watched that video already, then we're ready to start talking about how to find the right home for you. If you've completed your pre-approval, then you already know how much the bank will lend to you. But how big of a monthly payment will actually fit with your budget? Banks often overlend to people, which can put you in the unfortunate situation of being house poor. House poor means that you're spending such a large portion of your income on your home that you're unable to meet your other financial goals like saving for retirement. This can easily happen if you borrow too much or don't consider the other costs of owning a home, such as home insurance, property taxes, maintenance, homeowners associations fees, and utilities. Regardless of how much the bank is willing to lend to you, I recommend keeping your total home ownership budget under 30% of your gross income. Gross income is the amount you get paid before income taxes get removed from your paycheck. Let's look at a quick example. If you earn $60,000 per year pre-tax, then divide that by 12 to get your monthly gross income of $5,000. Multiply that by 30% and you get a monthly home ownership budget of $1,500 or less. Depending on your income and the housing prices in your area, this 30% rule may not be possible currently, but it's a good longer-term goal to work towards. Now, to finish your budget, you'll need to estimate all of these other homeownership expenses. Let's talk briefly about each. For homeowner insurance, you can easily get a quote for any property. Just let the insurance company know that you'd like a quote for that particular address. For homeowners association fees, most online property listing websites will mention if homeowners association fees are applicable to that property and how much they are. Utilities can vary widely based on the climate in that region and the size of the house, but a bit of research online should get you a ballpark figure. Most mortgage companies will include property taxes in your monthly mortgage payment, so you may not need to calculate this separately at all. If you have a general mortgage estimate from an online calculator, for example, that isn't tied to a specific property, then you may need to do an estimate. This can be complicated since property taxes vary by state, county, and even by school district. This will take some Googling based on the city and zip code, but it's worth spending some time on since it will likely end up being thousands of dollars per year in property taxes. Once you have all these pieces together, you should have a solid handle on your expected monthly housing budget for any given property. Another consideration is how big of a down payment you plan to make. Depending on the type of mortgage loan, the minimum down payment will generally be somewhere between 0 and 10%, but you can always choose to put down more. The key break point is at 20% down payment. If you're able to reach a down payment of 20%, then the lender will no longer require that you purchase private mortgage insurance or PMI. PMI is insurance for the lender in case you fail to make your payments and default on your mortgage loan. PMI costs fluctuate based on the size of the loan and your credit score, but they're typically between 0.5% and 1.5% of your total mortgage loan amount. That doesn't sound like a lot, but let's look at an example. The average US home price is about $400,000. If we assume you put 10% down, the actual mortgage loan would be $360,000. Based on our PMI estimate range, we get between $1,800 and $5,400 per year being spent on PMI alone. Saving 20% upfront for a down payment is a big hill to climb, and don't feel like that's required for your first home purchase. In fact, the average down payment for new home buyers is only 6%. Most people start with the smallest down payment and then work to pay their loan off ahead of schedule until they reach 20% equity. Equity is a technical finance term here that just means percentage ownership. Any extra payment you make above and beyond your monthly mortgage payment will go 100% towards the principal, which reduces the interest you end up paying over time on the loan. Once you reach 20%, then you'll be able to start saving and investing all that money that otherwise would be spent on PMI payments. Some lenders will require you to actually refinance to remove the PMI, while others will allow you to simply ask for it to be turned off. Be sure you find out the specific circumstances for your mortgage loan. Now that you know how much you plan to spend on a home, it's time to decide what you want to buy. This is the point where many people engage with a realtor who has knowledge of the area to help them find the right property. My next video will be all about choosing the right realtor, so we'll set that topic aside for now. Picking a location is always a balance between budget, distance from work or leisure activities, the school district, lot size, expected investment value, and many other factors. You'll rarely get everything you want, so be sure you know which of these is most important to you. You should also give some thought to the types of properties you're interested in. This could be a house, apartment, condo, townhome, a multifamily unit, or even an empty lot that you plan to build a new property on. The property types that are available will depend heavily on the area you're looking in. Each of these property types has its own pros and cons, and I recommend researching a bit about each to see what will fit you best. Most areas have hundreds or thousands of properties for sale at any one time. This overwhelming number of options led to the creation of some industry standard data points that are gathered for every property to help compare and filter them more easily. The first major data point is price range. Filtering the results to homes that fit your budget is a great first step. The next most important data point is the number of bedrooms and bathrooms. Most people will set a minimum number of each based on how many people they expect to have living with them. Square footage, often abbreviated as SQFT, is another standard data point frequently referred to. While the exact layout of the house can make it feel a lot bigger or smaller, you'll need to have an idea of what size range will fit your family. Lot size is another standard data point for most property types. Some people want a large yard for their kids or dogs, other people want as little yard to take care of as possible. Depending on your area, you may have other data points that are applicable, like parking spaces, garage size, a pool, what year the house was built, the number of floors, and many others. Once you've thought about what you want in your dream property, it's time to start looking. There are many websites out there with property listings that you can use to search and filter by these common data points. Each site has its own features and user interface, but they all largely include the same properties and pull from the same data sources. Throughout my life, I've bought houses in multiple different states, and I've personally used Zillow.com, Realtor.com, and Trulia.com for all of those purchases without any problems. Once you're comfortable with how to search on these sites, you can also set up alerts that email you when a new property that matches your search criteria is first listed. This can be especially helpful in competitive markets where homes are selling really quickly. If you prefer to have someone else search through the available inventory of homes, then a realtor will be a huge help to you. You can spend a lot of time on these sites looking through photos, refining your search criteria, but eventually you'll want to walk through a property in person. This is called a showing and will need to be scheduled with the seller's realtor. This is generally the point where you'll want to engage your own realtor if you haven't already to help set up these showings. Finding a good realtor is a really important part of having a good home buying experience. My next video will give you all the info you need to understand the realtor profession and choose the right realtor for you so you can continue your home buying journey. I'll see you soon in part 3 of this home buying video series. See you next time.